All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. Today is August 25th, 2025. And the top story this morning is the post-Fed euphoria that swept over markets on Friday appears to be giving back some of those gains, reversing at least partially at the moment ahead of the opening bell this morning. So what the heck happened on Friday? Jerome Powell made his annual speech at the Jackson Hole Symposium, where all the central bankers from around the world come and gather, eat fancy food and listen to fancy music and wear expensive clothes and put their pinkies up at inopportune times, all while talking about how much the pain of the average person deeply affects them personally. Well, during his speech, Powell came out and he was modestly dovish, I would say. The market was like, will he be a hawk because he's wanting to give the finger to Trump or not? No, he didn't really do that. He came out, he was kind of dovish. He wasn't like over the top. I'm going to cut big, nothing like that really happened. But he did come off modestly dovish. He did suggest that adjustments to our policy framework may be justified based on the totality of the incoming data. His wishy-washy statement says, yeah, in September, I'm probably going to cut rates. And the market did rally on that. Now, Powell also made reference to risks of higher unemployment, weakness in the labor markets. Simultaneously, he made reference to the prospects for increases in consumer prices and higher inflation on the horizon. Holy crap, there's the stag and deflation, two things that he said a few months ago that he couldn't see anywhere. So it was actually a pretty gruesome assessment of the state of the U.S. economy. And now, who'd have thought that would be great news for markets? I'll tell you why it was great news for markets. It wasn't what Powell said. It was what the Fed released in their policy framework, where they pretty much removed references to the 2% inflation target. In other words, the Fed's like, you know what? After 53 consecutive months of not hitting our 2% inflation target, after telling us it would be transitory, remember, we're going to go ahead and just get rid of that whole 2% inflation target. We're not even going to pretend to care about 2% inflation anymore because we know we're not going to hit it. And we know that we're about to cut rates and probably print money sooner or later amid all-time high asset prices, which means that, guys, they're not going to really care about inflation. They are prioritizing employment. They're prioritizing asset bubbles over price stability. And that, I think, sent the market into overdrive. We saw asset prices across the board ripping on Friday. Stocks went higher. Gold went higher. Silver went higher. Bitcoin went higher. Put a pin in that. Bonds went higher. Yields were falling. People were buying everything. The Dixie was crashing. Get the heck out of the dollar and into anything you can. It was, at least asset-wise, it was pretty much a crack-up boom happening on Friday afternoon. We didn't have hyperinflation on Friday, but people were trading their dollars for anything they could buy. Now, fast forward to today, and we're reversing that. Stocks are down. Yields were up a little bit. Bitcoin crashing. Now, what happened to Bitcoin? This is interesting. There was another whale sighting in Bitcoin over the weekend. Now, initially, Bitcoin prices rallied on that Fed, whatever you want to call it, at Jackson Hole. But then over the weekend, another whale came out and he dumped billions of dollars worth of Bitcoin over a span of a couple of minutes, crashing the price by $4,000 over the same time frame. This is the second time this has happened in the last month or two here, where one of these OG Bitcoin whales, one of the guys like the initial early adopters who owned tens of thousands of Bitcoin that he probably bought when it was a fraction of a penny, now it's worth tens of billions. And they're selling this Bitcoin all at once in these big, massive dumps. Now, that's kind of interesting to me because if you're a whale and you have the ability to crash the market and you're looking to liquidate, you don't dump it all at once. And you don't dump it during the weekend, the least liquid time in Bitcoin markets. It's almost like these whales want Bitcoin's price lower, because if your goal is lower prices, this is exactly what you would do. Dump a whole bunch in the middle of the night on a weekend when nobody's looking, crash the price, and then nibble back and buy the price back up. So honestly, I don't really know what's going here. Maybe this guy had levered bets elsewhere that got margin called on Friday. He needed to raise the capital. Maybe that happened. or maybe this is just a coordinated dump to get lower prices so they could buy the dips. There's a lot of people are saying that these whales are selling their Bitcoin and moving over to Ethereum, which recently has made a new high, just barely. But to be honest with you, Ethereum was selling off over the weekend too, so I don't really buy that so much. Either way, guys, there are these whales out there. It's important to understand the risks. There are people who own enough Bitcoin to crash the price, at least temporarily. It's a risk. It's another reason why you need to be careful on leverage. A lot of levered long Bitcoin trades got closed out over the weekend. They just got liquidated because of this whale dumping. And as always, guys, we are within a few weeks, in my opinion, of the onset of crypto winter. And you got to be careful when going out on leverage. We got some other interesting stories happening this weekend. Ørsted, the European wind farm or windmill maker, their stock is crashing after President Trump canceled an 80% complete offshore wind farm. Now, in my opinion, the only thing that is dumber than the government subsidizing offshore wind farms is the government subsidizing offshore wind farms until they're 80% complete and then pulling the plug on them once you've burned all that capital. That takes a dumb decision and makes it even worse. Now, this is the second time President Trump has done this year. We'll talk about what I think he's doing here and what I think he's trying to get out of it. I think it's affecting the blue wall that separates Pennsylvania and Massachusetts, in my opinion. That's what's going on there. We've also got a big merger going on this morning. Keurig Dr Pepper is buying JDE Peets for $18 billion. They are buying, this is a big European coffee company. They're going to make the company even bigger before they split it in half. And then the Keurig coffee business goes one way and the beverage and soda business goes the other way. They're still going to be friends, but they're making the company bigger before splitting it up in half. We've got an interesting story developing in the Postal Service. We've got postal services all across the world are halting small package shipments to the United States right now. This is over the U.S. ending the de minimis exemption for small packages. Previously, a small package, like you order some plastic piece of crap from China, from Wish.com, it comes in a little package. It only costs you like $20. You don't have to pay any tariffs or customs duties on that. They basically just wave it right through. That has gone away. And now these foreign postal services have no idea. There's no framework. There's no form to fill out. They don't know who's going to pay the tariffs, how to pay the tariffs, who do I make the check out to? None of that stuff has been sorted out. So they're just like, we're not going to ship small packages to the U.S. anymore. Great news. If you are a vendor in the United States doing e-commerce, selling small packages domestically. Terrible news if you're one of these guys doing drop shipments of little plastic crap from China. This pretty much wipes you out. Now, maybe they get their act together, they figure out how they're going to do it, and this resumes. But for now, that stuff is being halted. We've got an Evergrande story again. I love this story. I freaking love this Evergrande story. Evergrande has officially been delisted in Hong Kong. This is almost 2 years after the company filed for bankruptcy, but it's the last sentence in this article about Evergrande getting delisted that was like the WTF OMG moment. This is really, really bad. And of course, they put it at the very last sentence, the very end of the article, hoping nobody would notice. But wow, you're going to want to see this one. We've got an article in Bloomberg about how private credit is fueling the AI bubble and NVIDIA's earnings, which, by the way, we have NVIDIA's earnings on Wednesday, which are sure to be spectacular once again because they are still burning capital at ridiculous rates, and most of that capital burn is inflating NVIDIA's earnings. And we've got two articles suggesting some trouble in Japanese automakers this morning. First one, the NHTSA is investigating millions of Hondas for an issue where they're throwing connecting rods, which anybody who's into cars knows that's pretty much the end of your engine when that happens. Could be potentially a very expensive recall for Honda. And we got a story about Mercedes-Benz pension fund is selling their stake in Nissan. More bad news for Nissan. Guys, that company's probably not going to make it. More trouble for Japanese automakers on top of the trade war that is disproportionately affecting Japanese automakers. And we got a lot to talk about this morning. Hey, how about we shrink my big melon of a head and let's see what's going on in the world of finance today. Don't forget that like button and that subscribe button right next to it if you're new here, so you can come back and have your coffee with us melon heads tomorrow morning, because we do this one every day. And right now, the S&P 500, negative by 16 points, about 0.25%. Again, it's not a crash. It's not a big reversal, but we are giving back some of those gains that we saw Friday afternoon. The Dow is joining in, down 129 points or 0.28% to the downside. And the NASDAQ is leading the way lower, off by 85 points or about 0.37% lower ahead of the opening bell. Meanwhile, the dollar is a little bit stronger this morning, 97.91. That's up by 19 basis points, now 20 basis points. Of course, that's after falling more than 100 basis points on Friday. The dollar got absolutely bludgeoned in that Jerome Powell speech where he basically cleared the way for the September rate cuts. And looking over at the bond market this morning, we've got a lot of green here, higher yields. Remember, that means bonds being sold, lower prices equals higher yields. The 30-year Treasury is at 4.905. That's higher by 2 points and change. The 10 years at 4.282, also higher by 2 and change. The 2-year yield is at 3.728. That's 4 points higher. And the 1 month is actually down a fraction of a point at 4.349. And looking over at commodities, we've got mostly red this morning after being almost entirely green on Friday. Spot gold is off by $8.40 here at $3,363 for spot gold. That's off by about 0.25%. My favorite of the shiny, spot silver, $38.64. That's down by about 20 cents after rising to nearly $39 on Friday. But this morning we're off by about 0.5%. But I still like the shiny, as a matter of fact. Copper is one of the few that's higher this morning, up by about 0.2%, $4.55 for copper futures December. Platinum is down by about 1.4%. Palladium is down by about 1.9%. And crude oil is higher here by 0.75%, $64.13 for October WTI futures. Those are up by about 46 cents. All right, let's look at the Bitcoin chart here because we are making new lower lows this morning here, $111,469. And you can see here, guys, it was falling all weekend after initially having a pretty good bump on Friday off of that J-Pound news. Now, some important technical things before we get into the why. Remember, we had some support at the 50-day moving average a couple of weeks ago, and then we broke down below that level last week. On Friday, we recaptured that level, but we rejected it. Look at that. Oh, that is bad. That is a retest and a failure, showing Bitcoin moving lower. Support here is probably somewhere around the 200-day moving average, maybe that low from back in, when was that? In June. So we could be heading to around 100,000 here before we find support if this thing doesn't reverse quickly here. So what's going on with Bitcoin? We've got this story in crypto news. Bitcoin whale sells 24,000 Bitcoin, triggering a flash crash, and he still holds $17 billion worth of Bitcoin. So this guy came out, sold a few $1 billion. He's still got more than $10 billion to sell, which means if he wants the price lower, he's going to get it. A massive Bitcoin whale dumped over the weekend has sparked major liquidations, dragging Bitcoin to a key support zone near 113,000. A single Bitcoin whale sold 24,000 Bitcoin on Sunday, worth $2.7 billion, catalyzing a $4,000 crash in minutes. However, they still hold 152,874 Bitcoin. Good God, that's a lot of Bitcoin, valued at more than $17 billion. According to Sani, a Bitcoin on-chain analyst and founder of the Time Chain Index, the entity liquidated their entire 24,000 Bitcoin balance, sending it to Hyperunite. The coins had remained untouched for more than 5 years. Further, Bitcoin OGs have been swapping Bitcoin for Ethereum. Crypto analyst MLM pointed out that the whale sold 18,104. What is he saying? 18,142 Bitcoin worth $2 billion, with most of that rotated into Ethereum. All right, so this last part, I'm kind of struggling with this. I'm sure these on-chain guys can prove that this is actually happening. But look, Ethereum's price, if people are selling billions of dollars worth of Bitcoin and rolling it right into Ethereum, then why didn't Ethereum rally over the weekend? It didn't. Look, we had a big run-up in Ethereum on Friday here, this big green arrow here. That was your post-J-Powell euphoria sweeping over markets. It stalled out around 4,900. And then look, Bitcoin, it held up better than, or Ethereum held up better than Bitcoin over the weekend, but still it's down here, lower than when we were Friday afternoon. If billions of dollars was flowing out of Bitcoin and into Ethereum, I don't think we'd be seeing this. There is this effort to like gin up enthusiasm over Ethereum. I'm noticing in the crypto world lately, guys, I just don't really see it. To be honest with you, Ethereum is really lagging. It pretty much sat out this whole Bitcoin run. I mean, Ethereum just now recapturing the highs that we saw back in November of 2021. That's something Bitcoin did more than a year ago and then continued to rally on. So, I mean, look, if you're one of these guys who's like hoping for the flippening and where Ethereum overtakes Bitcoin, it ain't going to be this time around, if ever. Meanwhile, Ørsted falls to a record low after the order to halt a U.S. wind farm. WTF is going on here? Shares of Ørsted fell to the lowest on record after President Donald Trump's administration ordered construction to halt on an almost finished offshore wind farm 2 weeks after the company announced plans to raise 60 billion Danish kroner, about $9.4 billion, in a share sale backed by the government. The Danish wind company's management is meeting with investors and advisors in London on Tuesday to reassure them that a growing crisis is under control and that the planned rights issue will go ahead. Ørsted has yet to fully launch or price the offering and is being advised by banks, including JP Morgan and Morgan Stanley. Ørsted declined as much as 19% in Copenhagen on Monday. Shares are down almost 50% this year, wiping nearly $8 billion off the company's value. It's the latest push by the Trump administration to halt the expansion of offshore wind farms, an energy source that the president personally dislikes. Those efforts have included halting new leases on sites and permits for new offshore wind farms and rolling back tax credits that support projects. And look, take it from somebody who came from a perfectly good nuclear plant that was shut down prematurely because of out-of-control environmental activists. I can sympathize with Ørsted here. It sucks to have your perfectly good energy project torpedoed by government bureaucrats. How do you guys like it? I guess is all I would say here. This is stupid. We already spent the money to build the stupid thing. It's almost done. Now we should be letting it run. I don't like wind any more than President Trump does, but it's stupid to not turn on a project that's nearly complete. So what are they really thinking about here? Here's what I think they're talking about, and they hint at it later in this article. Earlier this year, Trump halted construction of another U.S. offshore wind farm, Equinor ASA's Empire Wind, but reversed it after reaching a deal with New York Governor Kathy Hochul that could allow new natural gas pipelines to be built in the state. And I think that is ultimately the goal here with halting this project as well. We've got this blue wall in New England that prevents the ocean of natural gas in Pennsylvania and some of the Appalachian states from reaching markets where it's desperately needed, like Massachusetts, where power and heating prices have exploded higher over the last couple of years. There is literally an ocean of natural gas in the Northeast United States, and yet Massachusetts buys their natural gas from freaking Trinidad. I kid you not. They pay to import LNG from freaking Trinidad for almost halfway across the world because there is this blue wall between New England and Pennsylvania, where all that gas is, that prevents any of those pipelines, any of that gas from reaching New England. And so in order to save the environment, what they do is they liquidate it in Trinidad, sail it all the way across the world from the freaking equator up to New England, where they regasify it, and then they sell it into New England, which is outrageously expensive and horrible for the environment. And so what I think President Trump is trying to do is to get these New England states to knock this stupidity off. And he's doing it by doubling down on the stupidity, canceling 80% complete projects to allow those pipelines to be built through the New England states so people in Massachusetts can heat their homes without being put in the poorhouse, for Christ's sake. So that's what I think is going on this morning and why they're canceling this wind farm. Otherwise, it's just more money going up in smoke. Meanwhile, we've got Keurig Dr Pepper to buy JDE Peet's for $18 billion in a revamp. This one is kind of front page news here, I think, because of that $18 billion price tag. A lot of people are talking about that. Keurig Dr Pepper agreed to buy JDE Peet's for 15.7 billion euros or $18.4 billion to bolster its struggling coffee business before kicking off a split of its operations. The company will pay 31.85 euros per share in cash for the Dutch firm, a 20% premium over its closing price on August 22nd, according to the statement. Keurig Dr Pepper then plans to separate its coffee and beverage units into two independent U.S.-listed companies once the deal is completed. We're seizing on an exceptional opportunity to create a global coffee giant, said CEO Tim Cofer. Keurig Dr Pepper saw roughly flat U.S. coffee sales in the second quarter as it warned the business will remain subdued for the balance of 2025, in part due to inflation and tariffs. Higher prices for K-Cups were offset by lower shipments of both single-serve pods and brewers. So the Keurig's business has been pretty much stalled. They're trying to buy this European coffee company to try to juice that higher. And for right now, Keurig Dr Pepper stock down by about 4.5% this morning ahead of the opening bell, although it is up about 9.3% year to date. Meanwhile, pay attention to you e-commerce guys out there. Mail carriers pause U.S. deliveries as tariff shifts sow confusion. This could potentially cause problems for small packages. Think twice before you order something on Amazon here, guys, shipping from China. Postal services across the world are suspending parcel deliveries to the U.S., citing confusion about how to process millions of low-value packages that will lose their duty-free treatment next week. As of August 29th, President Trump is ending the so-called de minimis exemption that has applied to more than 4 million parcels flowing through the U.S. each day, driven largely by e-commerce. Under the new regime, which started with China and Hong Kong in May, goods mailed from other countries will be subject to tariffs and compliance with the U.S. Customs and Border Protection rules. Verifiable gifts valued at less than $100 will remain duty-free, although how are you going to verify something as a gift under $100? I have no idea. In response to the changes, a growing number of national mail services are pausing some services to the U.S. as soon as this week, blaming a lack of clarity from U.S. authorities on how the duties will be collected and how to submit the required data. In Asia, Korea Post said it will halt accepting air parcels and some express mail services to the U.S. starting Tuesday, while keeping premium services operated via private couriers available subject to customs duties. Similarly, Singapore's SingPost will suspend standard services for commercial shipments to America from Monday, with Speed Post Express and Direct International Service available to retail and corporate customers, respectively. Japan warned of potential delays or return parcels because of the changes, with authorities vowing to share more information when available. And European postal services also made adjustments in light of the changes, with several suspending shipments. Norway and Finland mail carriers both said their stoppages begin on Saturday. So, guys, when you're doing any kind of e-commerce, if there is an option to sort by shipping from the U.S., you probably want to use that one. I don't know what this is going to look like, but I suspect there's a lot of people are not going to be getting their orders over this because these postal services around the world have no idea how to comply with these tariffs, let alone the higher prices that the tariffs are probably going to bring. So, good if you're shipping domestically, not good if you're doing overseas e-commerce. Meanwhile, this story just won't go away. I think the Chinese would love it if this story would go away, but it ain't. What to know about the delisting of property developer China Evergrande shares in Hong Kong. This is the story that just won't die. Shares in China Evergrande were removed from the Hong Kong Stock Exchange on Monday, marking another step in the retreat of the giant real estate developer whose downfall contributed to a prolonged crisis in China's property market. Evergrande's creditors are still working to wind up debts that amounted to more than $340 billion. Remember that number, guys. Evergrande's debts are $340 billion. Put a pin in that. Once China's second largest developer, it ran into trouble when Chinese regulators cracked down several years ago on what they deemed to be excess borrowing by developers. Gee, you think? That caused dozens of property companies to default on their debts, triggering a downturn in the property market that is still dragging on the world's second largest economy. Now, here's the rub, all right? We go through all this background as they say, oh, don't worry, China's stimulus, the property crisis, it's almost over, right? Nope, definitely not almost over. The very last sentence in this article, so far, about $250 million, with an M, worth of assets have been sold, the liquidators said, calling the realization modest. Evergrande owes $340 billion to their creditors. They've only liquidated $255 million of their assets. And there are people out there saying that the Chinese property crisis is over. It hasn't even started, folks. They have not even begun the fire sale. And look, the crash in value doesn't happen when the company goes bankrupt. The crash in value happens when the assets are sold at fire sale prices And that drags down the comps for the whole market. And then all the other ones start to go bankrupt too, because people realize their assets aren't worth spit. That hasn't even begun in China. This has been going on. This crash has been, it's like a slow market collapse has been going on, or slow motion collapse for like 5 years. And they've only sold $255 million worth of assets. Why haven't they sold any more? Because they can't find any buyers at prices they want. There is no way the Chinese property crisis is over. Oh, and by the way, every day there's fewer and fewer people in China, which means fewer and fewer people need places to live. Guys, this is going to get so much worse before it gets better. Speaking of bubbles, credit fuels the AI boom and fears of a bubble. That's right. Credit is now fueling the AI boom, not just big tech capex, but now they're borrowing to do it too. And there's Sam Altman, who really wishes he hadn't said that a few weeks ago when he said AI was in a bubble. Credit investors are pouring billions of dollars into artificial intelligence investments, just as industry executives and analysts are raising questions about whether the new technology is inflating another bubble. JP Morgan and Mitsubishi are leading the sale of more than $22 billion of loans to support Vantage Data Center's plan to build massive data center campus, people with knowledge of the matter said this week. Meta, the parent of Facebook, is getting $29 billion from Pacific Investment Management Company, or PIMCO, and Blue Owl Capital for a massive data center in rural Louisiana, Bloomberg reported this month. And plenty more of these deals are coming. OpenAI alone estimates it will need trillions, with a T, of dollars over time to spend on infrastructure required to develop and run artificial intelligence services. No freaking way. Sorry, trillions just ain't happening. Go home, Sam Altman, you're drunk. At the same time, key players in the industry acknowledge there's probably pain ahead for AI investors. OpenAI CEO Sam Altman said this week that he sees parallels between the current investment frenzy in artificial intelligence and the dot-com bubble in the late 90s. When discussing startup valuations, he said someone's going to get burned here. And a Massachusetts Institute of Technology initiative released a report indicating that 95% of generative AI projects in the corporate world have failed to yield any profit. Guys, they're talking about trillions of dollars that we're going to spend. The CEO of the company that's benefiting from most of that spend is saying it's a bubble. 95% of AI projects have failed to yield any profit. Man, that 5% that is yielding profit must be just amazing stuff. Better hope it is, because if it ain't, oh boy, there's a reckoning coming. Altogether, it's enough to make credit watchers nervous. Now, look at some of these numbers here. Private credit funding of artificial intelligence is running at around $50 billion a quarter at the low end for the past 3 quarters, even without factoring in those mega deals from Meta and Vantage. They are already providing 2 to 3 times what the public markets are providing, said Matthew Mish, head of credit strategy at UBS. Guys, that $50 billion, probably half of that every quarter is flowing right into NVIDIA's earnings. This is private credit, which, by the way, we all know private credit is in a bubble because these debt assets are not marked to market, and they're desperately trying to park all this garbage in our 401ks. $50 billion of that is inflating the AI bubble, which is also a bubble. So you got one bubble inflating another bubble, the bubble within the bubble. Meanwhile, there's still people out there who are insisting that it's not a bubble. Good luck with that. And many new computing hubs are being funded through commercial mortgage-backed securities. Oh, there's a third bubble there, the CMBS bubble, tied not to corporate entities, but to payments generated by the complexes. By the way, those complexes are not profitable. So what payments? But I digress. The amount of CMBS backed by AI infrastructure is already up 30% to $15.6 billion for the full year total in 2024. That's according to JP Morgan. Guys, it's not just big tech capex. This is bad debt is inflating the AI bubble. So look, NVIDIA reports on Wednesday. It's going to be an amazing number because all of this bad debt, where does it ultimately end up? It's being paid to construction, it's being paid to power companies, and it's being paid to NVIDIA to buy their hardware. So I'm sure NVIDIA's earnings are going to be amazing. But oh my God, at some point, they got to make a profit, which that MIT study, which hopefully wasn't fake like the other MIT study, but that MIT study says 95% of them are not profitable. Guys, this is pets.ai. That's what this is. This is the dot-com bubble all over again. All right, we got two more. Close out the show here. Japanese automakers, more pain ahead. U.S. probes into more than 1.4 million Honda vehicles over engine failure. Now, this is just a probe. This isn't a recall, but this could be potentially very expensive for Honda. The National Highway Traffic and Safety Administration is opening a probe into more than 1.4 million Honda vehicles sold in the United States over concerns that connecting rod bearing failures in their engines could lead to complete engine failure. And if anybody's ever seen a connecting rod failure, it's basically like a bullet being fired from inside your engine block. It blows right through the engine housing, just basically destroys your car, comes out the other side, and hopefully doesn't kill somebody. In a letter dated August 20th, the regulator said it received 414 reports of the issue in various Honda and Acura vehicles' 3.5-liter V6 engines. The investigation covers 2018 to 2020 Acura TLXs, MDXs, Honda Pilots, Honda Odysseys, and Honda Ridgeline vehicles. In 2024, the agency probed 1.4 million Honda vehicles on reports of serious engine issues following the Japanese automaker recalling 249,000 vehicles in November of 2023. Honda issued the recall to address a possible manufacturing defect in the engine crankshaft, which could cause the connecting rod bearing to prematurely wear and seize, leading to engine failure. But the U.S. Auto Safety Agency said in the August 20th letter that it's opening another investigation to more thoroughly evaluate the scope and severity of the potential issue and to fully assess related safety concerns. Now, look, guys, if this ends in a recall for 1.4 million vehicles, you can't change connecting rods and bearings and crankshafts without ripping the whole freaking engine apart. And if they fail, they destroy the car entirely. So Honda stock down a little bit here this morning, 2.17%. This one could end up being very expensive. But again, this is the early innings. This is just a probe. It's not a recall yet. We've also got Mercedes-Benz Pension Trust to sell its 3.8% stake in Nissan Motor. Things just keep getting worse for Nissan. The Pension Trust of Mercedes-Benz will sell off its roughly $346 million shareholding. That's a 3.8% stake in Nissan Motor. The spokesperson for the German carmaker said on Monday, adding to pressure on the Japanese automaker's share price. Japan's third largest automaker has been hit by U.S. tariffs, restructuring, and lower sales volumes that have contributed to a 24% slide in its share price this year. The sale indicates investor concern over the prospects for Nissan's turnaround plan that includes shutting production at some plants in Japan and overseas to slash costs and restore profitability. So things just keep getting worse for Nissan. Guys, this company, there's a very good chance Nissan won't be around this time next year. Maybe we bring back Datsun. Should I just throw it out there? You guys do what you want with it. Let's give Datsun another go, shall we? Hey, I just want to say thank you very much to Gordon Guanu. What's going on, Gordon? He says, good news. The inflation target remains 4%, and the chocolate ration has been increased from 55 grams to 35 grams. Is that a 1984 reference I'm seeing there? Yeah, good news. We're increasing the chocolate ration to a level that below what it used to be. Never mind. Just obey the propaganda. Yeah, inflation target of 4% now. Now, they didn't explicitly say 4%, and there actually were still in this policy framework, there were some references to 2% over time, but the Federal Reserve, through their actions on Friday, basically told us 2% is no longer a realistic target. We're like modestly committed to it, but we don't really care. And we are once again admitting that we're going to have to let inflation run 2% or higher than 2%. And it's nice of them to finally own up to that after 53 consecutive months of running inflation hotter than 2%. Hey, maybe you guys are being a little rash here, abandoning your target that you haven't hit in 53 months. I don't know. Maybe in 100 months, you might hit it. So maybe we're getting a little ahead of ourselves by abandoning our 2% target. And look, when the Fed abandoned their 2% target, what they told the market is they told them, look, Zerpenberg is coming back. We've got stagflation coming, just like the 1970s. By the way, in the 1970s, there were 3 distinct waves of inflation. We've only been through one this year, or in this decade, which means there could be 2 more severe waves of inflation on the horizon if we follow that 1970s stagflation playbook, which it looks like we're doing right now. There is just not enough gold in the world for what's coming, guys. Thank you very much, Gordon Guanu, for the literary reference this morning. Robert Feeds the Machine says Chinese apartments in your 401k. Now we're thinking outside the box. I tell you, that's a straight shooter with upper management written all over him, just like Peter, what's it? I can't remember. Zamir Naga, not going to work here anymore anyway. Yeah, it's coming. Why not? 401ks, pension plans, it's the dumping ground for all of Wall Street's crap, so we might as well let the Chinese get in on it. Good news, guys, an exciting opportunity. We are going to democratize access to ownership in Chinese buildings that are already crumbling and probably won't be standing in 10 years. But don't worry, it's a great opportunity to get in on the ground floor shortly before the second floor collapses on your head. Okay? Yeah, it was great. We're democratizing access. Thank you, Robert, for supporting the channel, sir. Steve Woida says, does Chinese real estate have global financial market exposure, or is it mostly local? I think, honestly, Steve, I think it's the other way around. I think the question is, what is the global financial markets exposure to Chinese real estate, more so than the other way around? Now, look, the Chinese real estate collapse is going to affect things like metals prices. It's going to affect things like concrete, because China has been this insatiable, hungry machine consuming raw materials in order to build out all these cities over the last 30, 40 years that nobody lives in. There's no reason to do that anymore. So I think we could see some commodity deflation coming out of that. We haven't seen it yet, really, but that could potentially be an issue there. I do think it's also going to drive gold potentially higher, because for the last 40 years, the average Chinese citizen has put everything he or she has into real estate. And it's like 90% of the average household wealth in China is in real estate. They're not going to do that anymore. And what is the chief beneficiary going to be? It's going to be gold there. When the government lied to you and created a bubble, you're not about to go buy stocks. You're not about to go buy government bonds. You're going to buy a safe haven asset. You're going to buy gold. So I think that's probably the biggest takeaways from that. And then the question is Western banks. What's their exposure? Did HSBC loan to these Chinese banks, and then those Chinese banks loan to Evergrande, and now we're all just sitting here pretending like Evergrande's ever going to pay them back? It ain't. And so I think that's probably the bigger worry there. Now, China's exposure to global financial markets could get worse. If you have a collapse in the West, like say there's a collapse in consumer spending here in the United States because everybody loses their jobs, that's going to hurt industrial production in China, absolutely. Although the tariffs are probably going to do that for them, regardless of whether consumption collapses in the U.S. or not. So everything's pretty interconnected now, Steve, and the world is deglobalizing right now. So it's really hard to predict all the different ripples coalescing around these different areas, what the net effect is going to be. A mess. And again, there's just not enough gold in the world for what's coming. In face of uncertainty, gold. That's all I would say. Thank you, Steve, for supporting the channel. Lirsi Yanoam says, GN getting copyright strike by Bloomberg, referring to Gamers Nexus. Absolutely. By the way, I absolutely love what Gamers Nexus has done over the last couple of weeks. They flew over to China at great expense to themselves, filmed themselves buying banned NVIDIA GPUs in China. They're like, here's my illegal GPU. Interviewed all of these middlemen, all of these guys that are like buying and selling GPUs out of back alleyways, asking, hey, this is illegal. How do you feel about this? Does NVIDIA know about this? And they all said the same thing. One eye open, one eye closed, which is the Chinese equivalent of turning a blind eye to an entire black market of GPU smuggling. Gamers Nexus did a phenomenal job investigating this. And then Bloomberg filed a copyright strike over a short clip of President Trump being quoted on Bloomberg, which is totally falls under the fair use policy. This is just another example of the financial press circling the wagons around NVIDIA. Shame on you, Bloomberg. This is anti-journalism. And look, I've had my own brush with this when Wall Street Journal and all their acolytes and MarketWatch all ran articles in 2023 that says, ignore this conspiracy theory by Twitter randos about NVIDIA and their shady relationship with CoreWeave and Magnetar Capital. Why is the financial press so determined to protect NVIDIA from at this point? It is so freaking obvious that NVIDIA is committing both accounting fraud and freaking treason with their illegal sales to China. And yet all the journalists of the world are protecting them. Is that why you guys went to journalism school? to be good little pawns in a corporate cover-up? Is that what you went to journalism school for? Is that what you dreamed about as a kid? Boy, I hope I can help some dirtbag CEO rip off people's 401ks in the future. Shame on you, Bloomberg. That was freaking gross. And Gamers Nexus, you're doing the job that these journalists should be doing. Fantastic coverage. And then they did a video over the weekend, too, about Bloomberg and their copyright strike. This guy flew across country basically just to walk into the lobby of Bloomberg and give them the finger. So, freaking legend. That's all I can say. Shame on you, Bloomberg. Good on you, Gamers Nexus. And thank you, Learcy, for supporting the channel. Krusty Whitebread says, Jay Yell says, get in line for a loaf, plebs. Jay Yell, is that my girl Aunt Janet you're talking about? Who says, don't worry, everybody. The economy is so strong and so resilient that the new bread lines will be open soon, courtesy of the government. And if these recent reports are serious that Donald Trump was considering me for the next Federal Reserve chair, then you can bet your hide that those bread lines will be coming sooner rather than later. And don't worry, a loaf of bread will be available for the low price of 10,000 American dollars, because that's all that crap is going to be worth by the time I'm done with my ZERP and my burr. Well, thank you very much, Janet, once again, for your unusual level of honesty that you always display here on this channel and nowhere else. Thank you, Krusty Whitebread, for supporting the channel. Yep, breadlines, making a comeback. All right. Hey, Bernie Sanders says breadlines is a good thing, that it's a sign of a government taking care of their people. So we got that going for us. And my buddy Nashville Pasta Man says, I like how they said it's not illegal here. Well, I'll be honest with you, Pasta Man. If some Chinese guy were to come up to me and say, hey, Jack, you're criticizing the government, that's illegal, I'd probably give him the finger and say, that ain't how we do things here. All right. So do I give a shit about following Chinese law? No, sir, I do not. Do I expect the Chinese to care about following U.S. law? No, sir, I do not. Do I expect American companies that do business in Taiwan with Taiwanese American CEOs, companies who are directly in the crosshair of a hypothetical Chinese invasion of Taiwan that is looking increasingly likely by the day, do I expect him to not sell technology with potentially military applications to our largest geopolitical adversary? No, I don't think he should be selling them to them. I think that's treason. It's obvious that there are military applications for this stuff. Otherwise, what the hell is Palantir doing, and how is their stock worth so much? And Anduril and all these other companies that are doing AI applications for the military. We know that's why the Chinese want this stuff. We know that's what they're using it for. We know they're going to use it to kill Taiwanese and probably American Marines and sailors. And NVIDIA is getting rich off of turning a blind eye to that being sold. That's stupid. Can you imagine if companies were selling nuclear technology to the Soviets in the 1950s and the 1960s? Wouldn't we call that treason back then? Why do we treat it with the kid gloves now? And again, why are journalists circling the wagons around these guys? Why is Bloomberg running interference for them to get this video taken down? And as Gamers Nexus pointed out, well, Bloomberg sells a lot of ads to NVIDIA, and hey, maybe that's why. There's an entire page of NVIDIA-sponsored content on Bloomberg. Is it worth that much money? No. Maybe Bloomberg just doesn't want to upset the Chinese. Maybe that's what they're doing it for. I don't know. But it's shameful. It really is. And do I expect the Chinese to care about U.S. law? No. But I do expect Americans to care about U.S. law. And Jensen Huang sure as heck does not. Thank you, Pasta Man, for supporting the channel. Thank you, everybody, for having your coffee with the Melonheads this morning. Appreciate all the super chats and the support of the channel, guys. Thank you as well to my magnanimous Melonheads on YouTube and Patreon for supporting the channel. Appreciate that so much. Links down below, should you feel so inclined. Don't forget that like button and that subscribe button on the way out. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small, dream big.